I woke up and thought to myself, how did I get here? I have the expensive Rolex, I have a beautiful place to live in, and I have all the other things that you need to fall under the successful category. And I'm only 19. So how exactly did I do it? Was it money that I got from my parents? Was it a super high paying 9-to-5 job? Or was it just luck? Well, it was neither one of those things. Before I moved out and got my own place, I used to live with my mother, and I was pretty much fully raised by her and only her. Now, don't get me wrong, I never grew up poor to the point where I was fighting for my life every single day. I'm not gonna claim that. But I definitely knew that I didn't have nearly as much as I needed to make a good life for myself. When people see how young I am and the amount of success I have, they ask, how much money did you truly inherit from your parents? And I'm gonna give you guys the honest truth. Zero. So what is it that I do? I trade contracts and futures in the stock market and crypto market. Now, I've had tons of great success with options trading, which is more so in the stock market, but you guys are here to understand my new journey, which is crypto trading. If you're watching this video, you most likely have some sort of interest in getting into crypto trading, but you want to know exactly how it goes. Well, I've been trading for the past 5 years of my life, and for the past 3 months, I've been trading crypto specifically. Crypto and options trading are almost identical, so I have a lot of knowledge that I'm going to pull from that, and I have a lot of new knowledge that I'm going to pull from this crypto trading. So over these past 3 months of crypto trading and 5 years of other trading experience, here's exactly what I learned. Now, this is going to be a lot of information, so make sure you take it all in. Stay away from pump and dumps. When you first get into crypto, you're going to understand that there's a lot of things that go up really, really fast. You're going to want to get in on these meme coins and make the most money you can in the shortest amount of time. Don't do that. Stick with all the mainstream options like Bitcoin, Ethereum, Solana, and there's a ton of other really good coins like utility coins, such as Core, Algo, Shiba, and Doge. Those are meme coins. You can still trade that's going to have consistent price action. Pick the right brokerage. When it comes to trading crypto, especially if you're in the US, it gets a little bit tricky because most crypto brokerages don't allow you to trade in the US. And if they do, they require you to KYC, which means know your customer. And that's something that we do not want to do. Recently, I tried out MEXC and also BingX. These are one of the biggest brokerages, and both of them just started requiring KYC, even though they didn't before. But I did partner up with a new brokerage called Blowfin. They are no KYC in the US, and they are also no VPN, which is huge. There are a few places in the US like DC and New York that are going to require a VPN for obvious reasons, but most of the rest of the US, no VPN. If you guys want to check them out, I'll leave the link down below. Really great brokerage overall, and this is what I've been using. Utilize dollar cost averaging. This sounds like a big fancy term, but it's not. DCA, also known as dollar cost average, basically means to just keep buying when you go down to lower your average costs and get yourself back into profit sooner. Now, dollar cost averaging can be extremely risky, so make sure you do it the right way. Typically, I like to DCA every time I'm down like 10%, 20%, 30% to add on to my position. And dollar cost averaging is one of the biggest reasons for my 95% win rate when trading crypto. A key thing to note here though is that you have to start light. If you have $1,000 in your portfolio and you start the trade off with $500, you don't leave yourself any room for dollar cost averaging. The more averages that you take, the tighter your averages are going to be. So make sure you do it smart. Start on low leverage. I see a lot of people jumping into crypto futures trading. They see all these exciting big numbers like, oh, I can do 100x leverage on this trade. Basically what that means is, let's say Bitcoin moves 1%, your trade is going to move 100% because you're on 100x leverage. Now this gets really, really tricky, really scary, and really dangerous really fast. If you guys are wondering what leverage I trade on 15x for scalps and between 3 and 8x for things that I'm holding out long term. You can't learn alone. Trading any sort of market is really simple overall, but you have to understand the fundamentals. Now, watching YouTube videos is great. It's a really good way to learn. There's a lot of education on this platform, but the real knowledge and education that you're going to get is from other traders who are successful. My recommendation to you, if you don't have any friends or anybody that you know that's a successful trader, join some sort of community where there's other people in the chat constantly talking about trading and whatnot. If you guys want the link to my Discord, it is down below. We have over 8,000 people in there. Ton of great opportunities for you guys. Link is down below. Learn charting patterns. Charting is going to be your best friend. And also don't overcomplicate your trading. Trading with simple patterns such as rising wedges or double bottoms or head and shoulders is a very simple method and it works. Limit your cost per trade. Let's say you have $1,000 in your portfolio and you're starting off with $50 in a trade and you're going to slowly average your way up. Don't let yourself get to the point where you have all $1,000 of your portfolio in a trade. It's just not smart. A good rule of thumb for me is I like to average until I have 20 to 30, maybe 40% of my portfolio in one trade, but that's if I'm really, really confident about it. But try to keep that on the lower end because God forbid something goes wrong, something explodes, and you don't have room for any more averages, you're gonna get liquidated. Take profit as much as you possibly can and set your stop loss to break even while continuing to move it up when you're in profit. Taking profit is huge. And I'm not gonna lie, I don't know about you guys, but I've never seen someone lose money taking a profit. A lot of people get greedy. They see 20, 30%. They're like, well, I want to hold until 150% because I'm not satisfied with 30% in 5 minutes. Well, you should be, because what happens is when you get greedy and you don't take profits, you lose it most of the time. Also, set your stop loss to break even. Once you're 20, 30, 40% in profit, set your stop loss at break even so that there is no way, no matter what, that you will lose money on this trade. Another good rule that I like to stand by is once I'm over 50%, I like to move my stop loss up so that no matter what, I'm in profit in this trade. Not only am I not going to lose money, but I'm also going to guarantee some profit locked in. Don't short in a bull market and don't go long in a bear market unless you're scalping really quick. There have been plenty of times that I have taken short trades on a bullish market and it has worked out, but that's because I know what I'm doing and I'm able to get in and out very quick. Trying to catch reversals at the top of a bull market is almost impossible. Don't try to do it, just stick with the trend. And if you don't see a good setup in the trend, just walk away. Understanding leverage versus time frame ratios. If you have a really nice head and shoulders setup that you're looking at on the 1 minute time frame and you're scalping on a 2 or 3x leverage, you're not going to be making any money. You might make some pennies, if that. Typically, when I'm scalping something super fast, like on the 3 minute or 1 minute time frame, I'm on 15 or 20x leverage, or even sometimes more, depending on the trade. But when you have a nice setup that you want to hold for a long period of time, like I said earlier, you want to hold it for maybe a day, 2 days, 3 days, a week even, lower your leverage so that you'll still make a nice gain, but you won't run too high of a risk of getting liquidated. Withdraw your money frequently. This is something that I messed up on within the first few weeks of me trading. I wasn't withdrawing any of my money because I just wanted to see it compound non-stop. Now, I've made some really, really nice returns. So I decided that from now on average, I am withdrawing between 10 and 20% of my portfolio every month. Now, this number is probably going to change as my portfolio grows, but it's really good to humble yourself sometimes. Sometimes you get stuck in this mental loop of seeing constant gains and you're growing, making this much money, this much money, this much money, but you don't ever withdraw, so you get a little too caught up. Take some of your profit out of your account, whether it's only $100 or even thousands of dollars, take it out. Utilize trading alerts. Now, this might sound a little bit biased because I just told you guys about my Discord community that I run, but almost every single trade that I take is alerted in my Discord every single day. I just posted this recap for everyone to see. In the past 7 days, I didn't have one single loss. Now, this week wasn't a crazy week for me because I didn't really have any trades that went super high over 100%, but overall still really good gains, and every single one of these trades are alerted. If you have access to a group like this, you can sit back and take these trades as they are alerted, but just make sure, even if you don't go with my group, make sure you find somebody that you trust and you understand that their knowledge is legitimate and they're actually taking the right trades. If you guys want access to my alerts, the link will be down below as well. Hold heavily oversold cryptos in your spot account. Almost every single crypto futures brokerage has an account called Spot. This is basically just buying and selling crypto, holding shares of it essentially. And what I like to do is I like to go out and look for cryptos that are insanely oversold but have a lot of good potential in the future. What I'll do is I'll consistently keep buying shares of those, not with a huge amount of my portfolio, only like 5 to 10% of it, but it's still good just to hold long term. This won't affect your account too much if you're using a small size, and you have potential for really high returns in the future. I just recently did this with Solana when it was closer to $100, and I was able to sell almost all of it upwards of $200. Document your trading week. It's very important to reflect every single week on your trading, because if you don't understand what you're doing right and you're doing wrong, you're just going to carry over your wrongs into the next week and you're not going to be able to fix anything. That stuff's going to compound over you and it's going to take over. Don't overlook that. Start small and grow big. Do not deposit money over time. Now, this isn't something that's mandatory. It's really just a tip. If you start off with $1,000 in your portfolio and you're good at what you do, you can have consistent win rates and consistent gains over time. You can be at $10,000 within 2 to 3 months. And once you're there, getting from 10,000 to 100K is even easier. This is what I did. I started with $25 when I first started trading because I didn't know how it was going to go. I wanted to learn and understand the fundamentals first and grow it over time. Now, 3 months later, I have thousands of dollars sitting in my portfolio, and that was all from compounding my gains over time. Now, of course, in the beginning, if you're using $25, you're going to have to do some high risk trades, but this is just my advice. You can take it if you want to or not. And the last piece of advice I have for you, never full port ever. If you don't understand what full port means, it means take your entire portfolio and put it into one single trade. A lot of people tend to do this after taking a big loss. You took a huge loss and you just want to get all of that back plus more, so you take your entire portfolio, throw that into one trade, and 9 times out of 10, you end up losing it all again. Don't do this. It hardly ever works, and all you're going to do is set yourself right back to the beginning, right where you were. You're going to lose all of your progress, and you're going to regret it heavily. So that's what I have for you guys in this video. That was almost everything that I've learned over the last 3 months of trading crypto and 5 years of trading in the stock market. If you guys enjoyed this video, make sure to leave a like down below and subscribe for more beautiful content and education like this. And I'm going to be doing a giveaway as well. 15 people over the next 30 days that join my Discord are going to get $250 sent straight to your brokerage. All you have to do is join the Discord and stay active in the chat. And it truly is as simple as you creating a brokerage, or if you already have one, that's fine. You send me your wallet address and I send you $250 to get started off with your crypto trading journey. I hope you guys enjoyed this video. I will see you guys in the next one. Peace out.